Hello there, this is fairbinaryoptions.com, and we are looking at the euro and Great Britain pound with bullish eyes, like the name of this analysis suggests. The reason for this bullish scenario stays with the fact that we are now in an area that has been a previous important support area here. If you take a look at it, this area here, so price tried here to the upside for so many times, but it formed, guess what, a contracting triangle. Take a look, A, B, C, D, E, and then price breaks higher. So this would be our contracting triangle here. And like this here, like this. And normally should be labeled from where it comes there to the downside, A, B, C, D, E, and then price breaks higher. But when price breaks higher, take a look, it forms another triangle when ending in this area here. And I would say that this one goes for another A, B, C, D, E, but starting from here or from here, it doesn't really matter. For this to be A, B, C, D, E. What I'm trying to say is that this situation here is happening or is forming when price is in a contracting triangle of a bigger degree, and therefore this triangle is visible on the daily chart. So I would say that this move to the upside is only a wave A, and this move to the upside goes from here, from this moment of time to here, and it should be labeled A, B, C, X, and then A, B, C, D, E, and this should be the whole leg of a triangle. So let's put on the screen the numbers. So this to be A, and the B wave here, and the C wave here, A, B, C, X wave, either here or here, it doesn't really matter, A, B, C, X wave. And then we had another wave A to the upside, the B wave, the C wave, A, B, C, looking at the D wave here, and an E wave to the upside, A, B, C, D, E, and therefore this should be the end of a leg of a triangle. I would say a wave A of a bigger degree. Now we would know this scenario if and when price is going to break above this consolidation area here, and if it's breaking the 83.63 area there, it means that the leg of a triangle actually ended here, and this is only part of the next leg. Now from this moment on to the downside, it might look at this is a classical ABC X wave and another ABC. Normally this looks like a double zigzag, and this X wave here, take a look, it channels really nice. Let me clone this one and put it here. So it is channeling nice. Price, it is retesting the channel, and I would say that on a break higher now we should go and see this trend line to be retested as well, or at least the half or the 50% of the channel to give us the target to the upside, so something like this anyways, to give us the target to the upside for the whole move in here to end the triangle. So what I would say is that this is a B wave that ended here. This whole move to be labeled of a lower degree to be labeled wave A, the B wave and the C wave, the X wave here, and then another A, B, C to the downside. Now in terms of Elliott waves, the first move to the upside is being called a double combination because it ends with a contracting triangle. The second move to the downside, or the B wave blue, should be called a double zigzag, and it is being formed by or ends with a truncated zigzag. Now this truncated zigzag has an important characteristic, as it is almost always completely retraced, and minimum to come should be 80% when compared with the whole leg here. So you just take a Fibonacci retracement, and your targets to the upside, if you are trading the regular spot market, should be 80% here, or even most of the times 100%. What I'm trying to say is that 83.8313 should be there, should hold for should come, and the C wave should end around here, around this level. But again, in a move that should take quite some time. So this is A, the B, and the C, D, E, and then to look to the downside. That is the plan, and in consequence, or as a consequence, what I would like to do here is to buy call options. With end of week expiration date, by the time markets are opening on Monday. Well, at least this is the plan. It remains to be seen if it's going to come to fruition or not. And let's see on Monday if we are right, or the market confirms our scenario, or not. Now the Monday is going to be only the entry point, and we'll see by the time the option expires if it is expiring in the money or not. Remember, whenever you are buying call options, you look for price to move to the upside, and therefore to be bigger than your striking price at the expiration date. Whenever you are buying put options, you are looking for price to move to the downside, and hence to be lower than the striking price. Thank you very much for being here. FairBinaryOptions.com here, and all these analysis and recommendations are possible due to our official sponsor here, Lioneye. Bye bye.